Hi, this is Tim Biggam, and this is Vol 411 on a day where we're seeing the VIX back above 20 with some weakness again, especially in those big NASDAQ names here. I think valuations perhaps coming to the forefront because earnings did beat for these mega cap tech names, but they've come down off the highs rather sharply here. We'll see what happens going forward. We're seeing the VIX really in that new regime of volatility, 16 to the downside. It briefly there about a week and a half ago, and then bounded by 22 to the upside. Still, a couple days ago, it got up to that level, but pulled back. So until further notice, I think that will be the new regime of volatility. Really was the regime before the COVID crisis hit for an extended period. So we may be entering back into that sort of sideways action here going forward for the VIX. Otherwise, we're seeing the skew briefly back above 140. We're seeing the VVIX, which had dipped below 100, heading towards 110 as the vol, as it's called, with option prices getting a little bit more expensive, a little more nervousness perhaps creeping into the market. Notable activity on the put side. Saw a big, May traditional put spread go up to 2017 about 20,000 times. And then the usual suspects out on the June traditional, some upside call buying as perhaps traders positioning to protect their portfolio by buying some upside protection in the VIX. So seasonality, the market running into probably the worst period historically here with May and June, the worst back-to-back 2 months. So this might provide a little bit of cushion to the downside for the VIX. To the upside, earnings season, as we talked about, pretty much over with, came out better than expected. So this might provide a little of that upside, resistance to the VIX. So range bound until further notice. New regime 16 to 22. So until next time, as always, this is Tim Biggam, and this has been Vol 411.